Hey gang, it's Simon here with your Tao Weekly outlook for the week beginning Monday the 20th of October 2025. I said in last week's video, very hard for me to get excited about the market until we break Friday's range, meaning that range that very large range that we saw back on Friday the 10th of October. All right, and all we've done over the past week is chop within that range. All right, so that remains my view. Unless we take out the high and kind of make new highs, or we take out the low, really we're just in a bit of a chop fest where you don't really want to be taking strong directional views. And guess what? The Nasdaq looks exactly the same. If we have a quick look at the Nasdaq futures, you can see, again, big range on that Friday bar, Friday the 10th, a lot of chop. If we look at the S&P futures, see a lot of consistency here. Now, not surprisingly, S&P and Nasdaq have entered daily squeezes. All right, so there is a compression in volatility, which usually leads to a larger move once that volatility is released. If we look at the Russell IW, this one broke Friday's range to the upside, but then very quickly collapsed back down. This was largely thanks to regional banks. Regional banks have got a big weighting in the Russell 2000, and we saw a couple of two-bit banks, Zions and Western Alliance. They reported some credit write-downs, and the market predictably beat them up. You can see we had a 13% drop last Thursday, followed by a 5% rally in Zions. If we look at Western Alliance, similar sort of thing, an 11% drop, bit of a bounce. But this had a big impact on KRE, Regional Banking Index. That dropped 6.2% last Thursday, and that was kind of IWM's undoing, if you like. Made a new high on the Wednesday, big reversal on the Thursday, and then Friday we closed back below this kind of breakout level. This white horizontal line on the chart is a multi-year breakout level for IWM. Right, so closing back below that level is not ideal for the bulls. Worth continuing to check in with the dollar here. The dollar is looking uncertain in terms of trend. It's gone from a very clear downtrend to a very clear sideways trend, but it's showing signs of some near-term bullishness. I say that because we've got a pattern of higher highs and higher lows, all right? And that is the very definition of an uptrend. So the dollar's gone from looking outright bearish to potentially short-term bullish, all right, particularly if this whole low holds. Now, given where we are with positioning in equities, if the dollar does go for a big rally here, that could certainly prove to be quite a headache for the equity market and for risk markets in general. HYG, which is a barometer of kind of the credit environment, is not looking super bullish here. We've broken below the 50-day simple moving average, that green line on my chart. We've rallied back into it a couple of times, but so far it is acting as resistance. All right, so HYG not quite out of the woods yet. TLT, conversely, has been surging. TLT is a proxy for the bond market. That means yields, 10-year yields have been lowering. We got to 10-year yields below 5%, below 4%. Briefly on Thursday. Now, if HYG is falling and yields are falling, you know, it could be a warning that yields are falling for bad reasons. I.e., there's a little bit of fear. And certainly, you know, the market has got a sniff of kind of credit risk following those two chargebacks announced by those two regional banks. Gold and silver still on fire. Gold futures made a new all-time high on Friday, but didn't manage to stick the highs. Had a pretty big reversal. A little bit of buying in their pre-market today. Silver had a little bit of a seizure on Friday. Silver futures, or SLV ETF, lost nearly 4.5%. Silver futures are trading a little bit better in Asian trade this morning. Oil looks completely friendless here, and this ought to be a positive for inflation, but oil here are kind of drilling its way to the core of the earth, if you pardon the pun. Maybe we're kind of getting to a range where, or getting near a range where it might start to find some support around that $55 mark. In terms of this week, I mean, earnings are going to be a big deal. Earnings season really kind of heats up this week. Next week is the really big week, but you know, we've got things like Netflix and Tesla and IBM and Intel, some gold companies, some defense stocks, pretty heavy earnings roster. We've also got CPI out this week. That comes in cooler than expected, then I think the market will rejoice. Of course, if it does come in hotter than expected, we can expect some weakness. But really and truly, trying to predict what the market's going to do here, I think is a bit of a fool's errand. I'm really waiting to see a break. I'm keeping positioning incredibly light until we see that break. My best guess is that the market does leak lower from here. I wouldn't be surprised if we see that sort of a pattern. I think 640 could be a support level, and that could provide a really good buying opportunity into the end of the year. But just because that's what I'm kind of expecting, it doesn't mean that's what's going to happen. And it's not even something I'm positioning for. Okay, I'm going to wait for the market to show me its hand and then place my trades accordingly when I have an edge. That's what I got for you today. I hope it helps. I wish you good trading, and I'll catch you next time. Thank you.